Hello, this is Simon Thompson, Vice President and Wealth Advisor at Texas Legacy Wealth Management. Welcome to our monthly market update for February 2015. We're going to walk through the major market events of the month. Securities offered through LPL Financial, member FINRA SIPC, investment advice offered through Texas Legacy Wealth Management, a registered investment advisor and separate entity from LPL Financial. After a rough start to the year, with the S&P 500 down roughly 3% in January, February saw a major bounce back, with the best month since October of 2011, as the index climbed about 5.5%. Returns for February were driven primarily by a solid earnings season, a rally in oil prices, comforting words from the Fed, and a reduction in geopolitical risk. As fourth quarter earnings reporting wrapped up, we saw a fairly strong earnings season, with 70% of companies in the S&P 500 beating earnings estimates. Earnings per share growth was just shy of 7%, and revenue growth was steady at about 2%. This strength came despite two weaknesses, energy and the dollar, frequently cited in earnings reports. The energy sector was hit hard as plunging oil prices during the latter half of 2014 impacted earnings. The damage wasn't contained to just the energy sector, as many companies in other sectors also warned of the impact of lower oil prices. We also saw a number of large multinational U.S. companies reference the negative impact of currency exchange due to the continuing strength of the dollar. Greece grabbed the headlines yet again as they threatened to take a hard line in their negotiations with the Troika of the European Commission, IMF, and ECB. The rest of the Eurozone didn't back down, and eventually the Greeks succumbed to the pressure and were able to reach a compromise, giving the Greeks a 4-month extension of their bailout. The 10-year Treasury yield rallied throughout the month, after closing under 1.7% in January. Positive earnings and economic growth may have played a role in seeing rates move higher. All eyes were on the Fed toward the end of the month, when Fed Chair Yellen maintained a somewhat dovish tone during her semi-annual testimony to Congress, suggesting that rates may be lower for longer. The market will continue to look to economic data and Fed statements for clues that the Fed will raise rates sooner or later than expected. As we look toward the rest of 2015, we continue to see a growing U.S. economy and the emergence of green shoots in the European economy. It would not surprise us to see increased volatility with the potential of a substantial pullback at some point in the year. That said, we don't see a recession on the horizon and maintain our bullish outlook. For more information about Texas Legacy Wealth Management, you can contact us via phone, email, or feel free to visit our website. We would also like you to follow us on Twitter and like us on Facebook. Thank you.